Hey guys, today's Sunday, March the 5th of 2023, and I wanted to do a little quick bonus video on platinum. I have been focusing on the metals and energy in the US dollar, and I am creating profiles for all of these instruments. And once I get all profiles, set up, then the game is on because now I have everything, all the information I have. And I haven't done one yet for platinum, so I wanted to give you a little preview of what I kind of start off with when I'm trying to figure out what's going on with an instrument. And I use a lot of things, like a carpenter uses different tools. I have to use different tools to kind of get an insight and possibly an edge. When you're competing with institutions, hedge funds, and computers, algorithms. So we have data on the weekly chart from 2007 on, and I like to start off with cycles and seasonalities. So in regards to cycles, two time frames I use is the weekly and the daily. So this is the weekly, using data from 2007. And one of the important cycles here, using the spectrum analyzer, is the 180, which is this one right here. So then you kind of see, you got to get the big picture of what price action does, with the cycles. As the cycle goes up, you see that here we just went sideways. And then the cycle goes down. It kind of came down and then started just consolidating, going sideways. The cycle went up. And it went down. But then got back on track with the cycle. So you see, this is a little nuances you pick. Just because we focused on, August 5th, somewhere around there, 2019, it bottoms out. These little things could happen where if you put a trend line or whatever, 45-degree scale angle, and it cracks, the trend is still up. So this was a nice little capitulation. Trapped some bears and then squeezed it up, and the peak hit here around March 25th. This fluctuates sometimes. When you're back testing, it normally was here and it kind of moves, but either way, instead of being here, you can see that it wasn't perfect. It was off February 16, peaked out here. Like I said, this always fluctuates, and then the cycle is down, and now we just hit a cycle low. December 19th, and now this cycle is up. Well, price action, maybe put a trend line. You can see that it's, higher, lower highs and lower lows. This one kind of looks like more like it's like in a consolidation pattern. But, the cycle now on the weekly is up. The next thing I like to look at is the dominant cycle. What is a dominant cycle within the weekly time frame? And what is the dominant cycle is the 26. And you can see that, let's just pick this range right here. Dominant cycle goes up, down, this is 26. And it fluctuates, and then you can just see price action. Sometimes here it didn't work out while it was going down, it was up, down. This one worked out. Dominant cycle went up, price action went up. Dominant cycle is down. It peaked out a little later. Dominant cycle is down. So now the dominant cycle, February the 21st, is now up. So what caused my attention or made me look at platinum was that bull kicker on the weekly chart. So looking at this looks nice. If price is going to do that, you could get in, low risk, put your stop, and see if this plays out. But this is not the only thing you want to just look at. You want to, what I call, create and build a cluster. A lot of things lining up where they show that there's a probability that chances are platinum is going to go higher. So looking at the 180, it's bullish when I create my profile. on the weekly cycle, I just put now that the weekly cycle is up and is bullish, and start building, a profile from there. Like they create a profile on everyone, on Americans, on, foreigners and whatever, when they come into the United States and travel abroad. They all creating profile. We all have a profile, on some computer, some system, and kind of know what we like, what we don't like, where we've been in the whole world, that kind of stuff. So you create that with your instrument that you're trading. And I am building a profile on these sectors, and all of them are different. They have different personalities. They dance differently. They move to different things differently. And they have their own style and their own vibration. And that's what you try to kind of pinpoint and figure out and build a case and a thesis on where these what this instrument moves to, and that's what I wanted to kind of show you here. So we're going to look at now the daily, but just to kind of recap, we know that the dominant cycle now is important. It's up, and that peaks around somewhere around May 22nd. It bottomed out February 21st. We also know that the weekly cycle, which is one of the strongest ones we have, is the 180. I like the 180. It's it's cutting a circle in half. Interesting how those numbers appear here and there. This one bottomed out December last week. And you can see that we rallied and then got a nice little sell off, and now we bottomed out, and now this cycle is up. September 2nd of 2024, and this is going to fluctuate. If we ever get to September, it probably ended up going here and going like that. It fluctuates because it's moving. It's adjusting to price action. So right now the cycle is up. So those are the two things that are positive on platinum. We're going to look at the daily, and I'm not going to make this video too long. Just kind of give you a little brush up on when I see things in regards to price action, because price action is king. When you got that big bull kicker on the weekly, something's going on, and then you have to start looking at all of the tools and seeing, what is causing that. People now are coming in. Is this is another rally? Is this a 1, 2, 3, 4, 5, move that's happening? You never know. We have our low here. Gann says always try to enter at the the second phase correction, which is pretty much a wave 2. If you could get into that wave 2 and ride this wave 3, which is the biggest wave, 4 and 5, this is just speculation. This is how you make the bulk of your money. The only thing is that we cannot take out that low. That's important for this to be a wave 2 to go up. So let's look at the daily chart and see what we got there. Okay, guys, so this is the daily chart of platinum. And what's interesting here is that there is not just one cycle here that's important. And that's normally typical on a daily chart. There's always either 1, 2, or 3, sometimes more. I typically try to use either 3 or if there's only one, obviously that's good. There's only one cycle that's important. But in this case, there are 3 cycles the spectrum analyzer picked out, and then there's a dominant cycle. So we pretty much have 4, really 3, but then there's a dominant, which is 4. We'll start off with the dominant cycle, which is the 122. As you can see, the dominant cycle, and I'm using all of data of 2007. So you can see, the dominant cycle goes up, goes down, goes up, goes down. And you can see how price action, behaves with it. Cycle went down. You see that it went inverted here. So it went up. Then it went down. You see how my lines are not that perfect, but you get the idea of what goes on. So it peaked out here, and it really peaked out here. So it's not perfect, but it gets you close enough to be like, all right, you got to be cautious, and the more you use these things, the more you learn to kind of be like, all right, we're in the danger zone. So we just got to be cautious, then you start creating trend lines. You start, using your Stokes, you start using signals. It's like, all right, once this thing turns, I'm out, or I'm raising my stop. If it gets out here, I'm out, because the dominant cycle now is down. You can see that now the dominant cycle is down here, February the 13th, and now this cycle is up. So can this play out, we already know that April is bullish, and we have a dominant cycle of April 18th. Now, is it going to go exactly to April 18th, make a high? I've seen it. I've seen it happen. Does it happen a lot? No. But it does happen where it just nails it, and then from there, it goes down. Sometimes it goes up here, goes down. Sometimes it goes up there, right on the 18th, goes down, or the 19th. Give it a little wiggle room of 3 days. Sometimes it does what I call the seasonality bear trap, or a cycle bear trap, where it gives you like a little push. It's like, yeah, it's still going, and the cycle peaked, and then right here, that's where they get you and they trap you, and then they push it down. So, but look at it as a bell curve, and there's just probabilities where it could be in one of those 3 spots: before, in the middle, or after. But know that the dominant cycle is down. So this is a little tidbit for you to kind of gauge on, chew on, let that sink in, and give you a little experience from what I've seen in the past. So you got the dominant cycle 122, that's up, and then there is, and I'm doing the bull case. The next bullish cycle is the 312. And this one bottomed out somewhere around December 14, but you can see that it was inverse. And now this cycle is up. So this lines up with the 180 cycle that we only have one on the weekly chart. And now the daily chart, the 312 is bullish all the way to June. And you know that April, where it peaks and then it goes down. So I don't know if this is going to play out, because now this is going to be going against the seasonalities. So something to keep in mind. Then you have 2 cycles here which are bearish: the 225 and the 258, and they're very similar, very close. The 225 peaks out here the last week of January 31st. And it bottoms out around May or June. So does that ring a bell? Yeah, it does ring a bell. The 258, somewhere around June. So then you ask yourself, all right, so the weekly cycles are up. Their daily cycles, there's 2 there's up. There's one, daily cycles, there's 2 that are down. The 225, the 258 are down. There's only one that's up, which is the bigger one, the 312, right here. And then you got the dominant cycle, which is 122 that is up. So what do you do about that? Well, from my experience, the weekly cycles dominant, or the weekly time frame chart is more dominant than the daily. But that doesn't mean, because the weekly cycle is up, and you have a mix of daily 2 up and 2 down, that just because you're going to go with the 2 that are up is going to play out. Sometimes I've seen it where you have the weekly cycles up, and you have 1 daily cycle up, you have 1 daily cycle down, and it follows the daily cycle that is down. In this case, we have 2: the dominant cycle that's up, the 312 cycle that's up, and then you have the 225 and the 258 that are down. The most important thing, if you pick up anything from this video, price is king with the big K. You follow what that bad boy is doing. And if it lines up with your thesis and theory and your calculations of the weekly and the daily, then that's what you're going to go with. And what you want to do is you want to build a case and use clusters with the big C of everything that's lining up, that's going up. Because what you're seeing is, according to Gann, the trend makes higher highs and higher lows. Higher highs and higher lows. So if the weekly is up, 2 of the daily cycles are up, price action is doing this wiggle room of going back and forth, not breaking any lows, and just continue doing that, then that's what you got to follow. Once that changes and it goes back down, everything changed. Something's not right. The calculations, everything, not that the calculation is that price action is not going to follow the cycles and it's doing its own thing and it's following something else. So that's my clue on that and my thoughts. Weekly cycles are up, 2 are down. You got to really focus on what price action is doing. And what we know as of right now is that the weekly has a bull kicker. People are piling up. Can it play out into April and then go down? Yeah, it can. But what you don't want to see is a bull trap and then they pull the carpet out, from the floor and hit your stops and go straight down. You want to see higher highs and higher lows. Put a trend line. If something like that gets violated, even if it breaks the trend line, maybe it might sneak back up and keep pushing. But what you don't want to see is this little thing and then this thing, because then things have changed. It's not trending higher. It's not playing out to a swing trade into April. With that, I'm going to leave you that information and we'll look at the seasonality and see what we could get out of there. Okay, so this is the seasonality chart of platinum. Percent of months in which platinum closed higher than it opened from 2019 to 2023. So what I like to do, I like to start with numbers of 5, 10, 15, and 20. 20 is the max. So looking at the 5-year, we can see that March is a little weaker. This is the 50%. So if it's here, it's flat. There's no edge. It's not even to the bulls nor to the bears. It's just flat. Flat, flat, flat. A little lower than 50%, that means that, it's more edge to the bears. Above 50%, more edge to the bulls. So looks like from a 5-year average, swing low to a swing high into April. That's how I look at it. And then from April, using a 5-year, swing high to a swing low into June. So look at it that way. So using a 5-year, we look that, April is pretty strong. Could be a swing high. But that's not enough. You got to go to 10 years and see what 10 years does. You can see then the theme is, okay, so March is very weak. Below the 50. June looks like it's weak, like March. So those are the 2 months you have in the back of your mind or some notes. And April is a little stronger. It's above the 50%. So it closes higher a little bit, So you start building a case. Go to 15-year. We're focusing on March, right? I mean, we can really see that this is super strong. Well, in a 15-year range, 15-year average range, March is still low. And June. April, kind of flat, a little below the 50. So it's not as strong, but it's a little weak, but not as strong either. So it's kind of close, but with a little weakness, but definitely higher than March. And then you go to the max, which is 20. And you can see that March is still the weakest. So could there be a little more downside into March? Yeah, it could be possibly. Maybe what we just seen, this bull kicker, traps some more bulls and then pushes it lower. So maybe somewhere in the mid, the mid of March, maybe towards the end of March or, towards the beginning, like around now, maybe slam it down and then go up. That's a possibility, but that's all probability, what I'm showing you. What's happening now is you got a bull kicker and it could be the beginning of this move higher. And it could be April where you could get this swing play to the upside. So that's what seasonality is giving us clue. And once April hits, it could be in the beginning of April, in the mid of April, or towards the end of April. In one of those 3 time frames, it could have the probability of stalling. And then you'll remember June is super weak. Where June, it could make a low somewhere between the first, mid, or the end of the week of June. So that's how I will look at it. So this bull kicker that just happened last week, looking at this in conjunction with the weekly cycles that are up, but now looking at the daily, they're kind of mixed. There's two that are down, there's two that are up, and the dominant cycle is up. So you start building a case and start, using probability. So what is the case? What is the chances of, this is the low and everybody's piling up to get this nice little swing play to the upside? And that's just using two tools, seasonality and cycles. So hopefully you like this video. There's other tools. This is not just it. This is not, your final thesis. If you trade like this, then that's cool. You make money, then, you shouldn't change anything. But with my experience, there's other little things, other little tidbits and information that you need to add to get a little more of an edge. Because, the computers know this. The computers know the cycles. And the algorithms in the institutions know that too. So you have to go a little beyond and look at other things that, they might, they may consider, may look at, may not. And that's when the Gann stuff kicks in, the other stuff that a lot of the, retail traders don't really look at. They're more moving averages and Stokes, which I do too, because I like to see what they like to see too. You have to kind of be on top of what they look at. So that way you kind of get the sentiment of what the other traders are looking at. But then they don't see other things that you look at that, could give you an edge. On top of that, using maybe computers to help you determine, where, the risks are and where the probabilities lie. But trading is not easy. It's hard and it's very challenging. And sometimes you could get to a pitfall where too much information, creates paralysis. In my case, when I started, that was the case. But I've, started fine tuning things and got to the point now. I was like, okay, so this is my core system. This is the things I like to look at because everybody else is looking at it and the other systems look at it, and then kind of inject the other stuff, the other techniques, more of the esoteric stuff that a lot of people don't include. That kind of gives me that edge to trade and get, a little edge on everybody else. But that's it. I don't want to make this video too long. Hopefully you like it, but just kind of, give you a glance of what, I recommend you do. If you're trading, just kind of start with those two things, cycles, and start with seasonality. Those are the most basic things. That kind of gives you what seasonality, what the instrument, typically does in the past. Does it always play out like concrete? No, of course not, because then you'd be a billionaire. You'll be like Bill Gates and like, Warren Buffett. But chances are these little things could play out. You make a little pocket of money. It might not go all the way to, to April. Maybe it goes to the end of March. It's like those little things you just to pick up. But, price action is the key. And that's where you like start learning all these little things. When people start to be like, oh yeah, I just use these cycles and seasonalities and that's it. And you can see by my experience and by my videos that sometimes they work and sometimes they don't. But you need to know and see them. One, because a lot of traders see them and a lot of retail traders don't see them. So a lot of people use them and a lot of people don't. But what from my experience, the big C word I use, clusters, when a lot of stuff lines up, the probability are greater that, chances are it could move in that direction. Well, I'm going to sign out. Hopefully you like this video. Leave your comments below and I'll keep you posted on my thoughts on platinum.